Hi there, welcome to my latest video. I'm Justin Waite, by the way, and in this video I'm going to look at 3 companies with news out. One of them is my star of the week. I've not done this before, but I've just been impressed by a company this week, and I'm going to make it my star of the week. I'll cover that. I'll look at the charts of companies that I think are interesting, the stock performance of the companies I've covered in the videos, also my actual stock performance, because, like I said, so I saw someone on Twitter recently say or suggest that the companies I'm talking about, I may not own stock in. The only reason why I talk about these companies is because I own stock in them. So I'm going to do a screenshot of my actual, Barclays stockbroker account to show you I do hold these stocks. I just thought I didn't understand the tweet at the start. What? Are you kidding? But yeah, so I only talk about companies on this video channel that I own stock in. Okay. Also, I'll be looking at my portfolio performance. Don't forget to subscribe if you want the next video straight to your inbox. Okay, hit the subscribe button and the bell. The bell is very important. You will not be notified that I've released a video unless you hit that bell. Don't forget to comment below. Is there anything in these videos that you'd like to see? I can do any kind of educational thing if you want. I will not cover a company I don't hold, okay, because I haven't researched it. I don't feel confident in it, so I'll get a couple of people asking questions about that. But is there anything else you'd like to see on this video? Let me know below. And don't forget, look at the show more menu just below this video. In fact, look at this video, it'll explain. So if you go to my channel on YouTube here, and you'll see home and videos, click videos, and you'll see all these videos here, but click any video, like the latest one there, and let me just pause that for a second. And if you scroll down, all right, you'll see show more, okay? Just below my face there. Show more expands this menu, and you can see here some previous company videos, A to Z, Agronomics. So you see all these videos here, all scroll down, and then other videos to watch, 10 lessons I've learned from investing in small caps, how to set up a chart for technical analysis, my stock picking strategy, how I use relative strength, how I monitor share price momentum, what's a balance sheet, what's a TR1, what is MACD, about me, and so that's all underneath that show me bit, right, which is just below my head there to expand the video. Okay, let's get into it, okay? Now, the theme of this video, the 3 companies. One of the quality filters I have when I'm looking for small cap stocks, I always say this, small cap stocks or micro cap stocks have the potential to really, multiply your initial investment many times over if you get it right. So there's potential big reward, but also big risk. And this is why you need a strategy. You have to know what you're doing. And this is what I've done, with my investing, and it's improved since I've sort of come up with the strategy, and most importantly, trying to stick by that strategy. I've done really well of late. I've not done any sort of punts. And I see investing really as all about probabilities, What's the probability of this company doing well from this level? And you have to weigh up. And sometimes you just look at a chart and think, well, okay, this company, okay, the story's improving, and the share price is now at an historic low, or the RSI is below where it normally is at this level. And every time it's been at this level, it's normally gone up. The probability of the share price going up could be quite good, but you've got to combine that with fundamentals. I think I'm not sort of a trader, so just don't look at just charts alone. But one of my quality filters is this, and this is the theme of this video, because the 3 companies that have news out this week all have this quality, of course, otherwise I wouldn't be investing in them. And that is, and I mention it over and over again, skin in the game. You are looking for CEOs who are owners of the company, not just managers who have been brought in, high-paid managers, okay? It's their business. That's what you're looking for. They've actually, brought it to the market, it's their business, and they have skin in the game. They own a large chunk of it. Why wouldn't a CEO own a chunk of stock? Ask yourself that question. If you're invested in a company, right, and the CEO has no skin in the game, ask yourself why. If he does promotional bits or they sell RNSs and it's quite bullish and all this, hang on a sec. You were talking this up, all right, and yet you don't have any shares? Let me put this to you then. How much do you care about a company you don't hold stock in compared to a company you do hold stock in? Exactly. Most of the companies out there you don't hold stock in, and you don't care about them at all. You only care about the shares you own. This is no different than the CEO. If the CEO doesn't have any shares in the game, why wouldn't they? They don't really care. They get paid, yeah. So you're looking for owners. They own the company. And that's why I'm making this company right now my star of the week. And this company is Immotion Group, all right? So this week, they lots of news came out. They did a fundraise as well. But this RNS came out, okay? It's very long, complicated. Essentially, it's about directors buying shares in the open market after the fundraise, okay? So this is basically it's a summary of it all. The directors, after the placing in the open market, have topped up their holdings with 189 grand's worth of shares. So they bought 189 grand's worth of shares. All right, in the open market, at around about the placing price, around about 7 pence. So the placing was about 6.7, I think it was. So right now, actually, you can buy shares in the company, right, at the same level that those investors or those directors have bought shares at. This is the overall sort of the holdings of the directors. Look at that. So let's look at the significant holders first of all. In fact, Sure Ventures now below 3% due to the new fundraise and new shares in issue. But Unicorn owed 6.4, Cavendish 5.16, Sure Ventures 2. Leona Dobby is the wife of a man who basically is an investment partner with Martin, the CEO. Okay, he's invested a lot with him, so they're very close, very sticky. Let's look at the directors' holders. Martin's topped up now. This is with all the shares in issue, brand new shares in issue. So Martin now holds 10.6%, or his interest in shares 10.6%. So this company is valued at 20 million. So he owns £2 million worth of shares. Look at all the directors. All the directors hold a little chunk of skin in the game. Look, David Marks, 3.4%. Rodney Finlay, 3.5%. Ken Mewson, 2.6%. So the directors hold 20% of the company. They have a material interest in the company. They want to see it doing well. So let me ask you this question, right? Why do you think they topped up in the company at this level? When you talk 190 grand's worth, right, that's not a spoof buy. That's not a spoof buy like recently I saw, in fact, in a previous video, Powerhouse Energy with a non-exec chairman bought 5 grand. It's 190 grand. And this is topping up, man. So they're adding to their holdings, which are quite significant. Why do you think they're doing this? I'll tell you my thoughts on it. They believe it's a good investment. Full stop. They know what's happening. And let's just go through the figures here. So they've said they're going to be sort of break-even, monthly break-even, with 410 headsets installed in Q1 next year. And they're targeting 1,000 installed headsets by the end of 2020. These are the directors. They can only buy at certain times, right? But they know what's coming. They know how well the business is doing. And they've put 190 grand in at 7 pence. Why? They genuinely think it's a good investment. I believe that. So if they do, and they know they know more about the business than you or me, why aren't it? Why? In fact, I did invest. So I just saw that drop off in that share price there. I thought, okay, I wasn't fully exposed to them. I'm scaling to every. I thought, well, I'd buy some more. And I bought I think I bought 3 chunks over a couple of days. And that convinced me. I thought the directors know about this. I've researched the company. I don't know as much as them, but I'm convinced this is the business improving. And so I'm going to put money in. They have. And that's it. It comes down to that. They're not going to throw 190 grand away. They know what's happening. They know from this level, it's a very good investment. And like I said, right now, I could buy shares at the same price as them, so I am buying shares at the right price. And I just think it's such a vote of confidence as well. So they've done a fundraise, which can't be whinged at. Oh, it's a fundraise, raising money. It's a new business, It's a startup. But they've now got a road to EBITDA, break even. So that's when they'll no longer be burning cash, pretty much. And going forward, the business looks to be improving. So they reckon by January or Q1, they'll have 410 headsets. They'll more than double that by 2020. Why are they saying that? And if you look at the news this week, there's been quite a few bits of news. There are a couple more deals come out as well. So it's worth doing some research. And when you see big director buys like this, it's worth looking into it. When you see a small director buy, it can be a bit of a spoof, And not only, when you see that from a company, not only should you question it, thinking, why have they bought so small here? But in my mind, they're trying to sort of misdirect you a little bit. If you get a small buy for a director, that should put you off rather than attract you to the share. But with Immotion, genuine big buys from the owners who all have skin in the game, topping up this level. Why? Because they see it is a good investment at this level. They know the business is improving, and they have a route through. They can see a route through to almost profitability. So that's why I topped up as well. Okay. All right. Next company news out is Bidstack down 4%. I think people were expecting some other kind of news. James came out with this news about the acquisition. Let's go into it. I don't want to look at the RNS because it's a bit boring. I want to look at James's take on it on LinkedIn. All right, James, the CEO. So he said, we're extremely proud to have announced our first acquisition since floating into exchange. PubGuard's technology enables Bidstack Group to protect gamers and game developers from advertising fraud across its platforms and ad formats. Given our goal is to become the biggest media owner within the world of video games. In fact, someone did say in the RNS, he didn't say that, he said significant owner. And someone said below, and the questions below in video said, ask James why he's gone from being the biggest to a significant. So he has reiterated that on LinkedIn actually. So the biggest media owner in the world in video games. We are preparing all operations and technology at borderless and frictionless scale. PubGuard are a major step towards that. I'd like to welcome Justin. Thank you very much. Oh, he doesn't mean Justin. He means Justin from PubGuard. Chris and the team into our London and international offices. I'm looking forward to working with them all personally upon my return from Shanghai. Interesting. And the commercial opportunities this immediately upon us. I will cover off more of our plans soon, and Simon will be able to share more of our investor event in September. So they've got an investor event coming up, and we are completing 3 years of work in 1 year. And that means a relentless push through to coming 5 months and beyond. Through the coming 5 months. Oh, 5 months and beyond. That means a relentless push through the coming 5 months and beyond. Interesting there. This acquisition accelerates the group's growth. This is just a start. P.S. I'm aware I need a new headshot. Now, you've got to understand the significance of this. People were expecting, I think, a trade deal or something. The share price come off a bit. But you've got to understand where Bidstack are, right? Their tech puts code in other brands, code. So imagine if you are sort of, a game publisher. You spend millions and millions developing that game, okay? You're very protective of your brand. Then all of a sudden, a company comes along and approaches you and says, we can help you earn more money by inserting native in-game advertising, which is programmatic, it's dynamic, it'll update, and it'll give you, several revenue streams. First of all, your thought is, hang on, I've got to have someone else's code within my code. So there's a massive issue of trust there, You have to be able to trust, Bidstack implicitly to want to do this. Because anything can go in there, couldn't it? Last thing you want is someone else's code, sort of serving up sort of dodgy ads or being hacked or something like that, or something going wrong. So Bidstack have to be, a top level trustworthy partner. And this PubGuard thing is part of that. Now, already they've got their tech in, some well-trusted publishers already. So, FM Football Manager, and there's Codemasters, which is, top-notch. Both those games are high-quality games. So first and foremost, they can say to other publishers, we've already got our code in these two guys' games. Obviously, they're top publishers of highest quality, AAA, publishers. So you can trust us on that level. But to go even one step further than this, they've gone with PubGuard. PubGuard, analyzes and monitors, analyzes for any malware, dodgy videos, or dodgy adverts, or anything like that. Anything untrustworthy, it'll automatically pull out. So it's another step in step up in security. So it's almost like saying, we are a blue chip in the world of gaming, and so you can trust us completely, implicitly with your. We understand we're a brand. We understand your brand is nothing more important than that. So this ticks a lot of boxes. And here's the quick details of the purchase. So they paid £200,000 pretty much in shares at 34.5 pence. The sellers, who are PubGuard directors, and Mercia Asset Management. In fact, that may ring a bell. Mike Hayes, who's non-exec director now for Bidstack, is on the board of Mercia Asset Management. So there's obviously a connection there. Mike's helping along there, doing some suggestions. So the loss was, they made a loss in the year of 270k. Period from December to March, May to December, they made 177k loss. Minimised media approximately assets, net assets 28k. I feel like this it's more than some of the parts. This company on its own, okay, it's doing okay. It's had some decent clients, and I'll come to that in a bit. But add that the Bidstack portfolio, and it's like 2 + 2 = 5, pretty much. It's a lot of synergy there, and I think it's worth a lot more together with Bidstack's offering. And so it just ticks those boxes. When you go to bigger publishers, we've already got the Bidstack. People say now we've already got some AAA publishers on with us, but also we've got heightened security, and so we regard your code as important as our code, pretty much. It's another interesting point here. So these are the clients of PubGuard, Daily Mail, Under Armour, A-Star Software, I don't know they are, Share Through, EA, and Text Now. EA is a very interesting client. So now, essentially, EA are a client of Bidstack's. Now, EA are a major game publisher. Look, they do FIFA, huge, rarely appropriate for in-game native advertising. NFL, they do that as well. Again, huge advertising opportunity. NHL, again, basketball and UFC. All those games or sports games have natural, native in-game advertising opportunities. So you would suggest there's potentially a big opportunity here. I just want to remind you, on the theme of skin in the game, look at this again. James owns 16.89% of the company. Francesco Fran owns 3%. There's 2 NEDs there, no longer NEDs, of course, but they own a little bit of a chunk of the game. But so again, 20% of this company is held by directors, same as Immotion, Of course, James is in, earlier. I mean, Immotion guys bought on the weekend. James in earlier, but he still owns. Listen, don't think that James doesn't watch the share price. He's very concerned about the share price. When you own 41 million shares in the company, of course you're concerned about the share price. So you do everything you can. You can't do anything about that. All you can do is keep developing the business, make the business better, and improve the business and generate value for shareholders, of which he's one. So when you've got CEOs, of course, the only reason why a CEO who hasn't got skin in the game would worry about the share price is getting sacked, pretty much. But it's a lot more than that. If you are the CEO of a company and you've got a major chunk in the game and the share price goes down and the share price can go through, you can lose your livelihood, everything, your reputation, a lot, So it's a lot more. You are an owner, you're not a manager. It's massive. Third company I want to talk about is Open Orphan. I like this company a lot. Like I said, look below, show more. I've done videos on this, just starting out. So this is a big deal here. Director changes, new independent non-executive director. So they announced that David Kelly is an independent non-executive director. David has extensive experience in the open drug company in both Europe and the US. So listen to this. He was executive vice president and managing director of Ireland at Horizon Therapeutics plc, a biopharmaceutical company listed on the NASDAQ and headquartered in Dublin. It gets better. Watch this. So his excellent combination of experience, having worked in larger product-focused pharmaceutical companies and also in turning around smaller pharmaceutical companies. Look at the figures here, okay? Look at this. This is a guy, I think it's a star signing. I really do for Open Orphan. An absolute steal here. It's not a steal, but I don't know how Carl's done this, because this guy is a phenomenal background. Look at this. He and his colleagues transformed AGI Therapeutics before selling it to Vidara Therapeutics, which in turn was acquired by Horizon Therapeutics, a company with a market cap of 4.5 billion. All right. David also served as senior vice president of Warner Chilcott, a fully integrated specialty pharma company. While at Warner Chilcott, he led the company's successful IPO NASDAQ. On October the 1st, 2013, Warner Chilcott was acquired by activists. Now, Allergan, you may have heard of Allergan, it's quite well known. They acquired this company, Warner Chilcott, for $5 billion and used the transaction to execute a corporate tax inversion to Ireland. So I don't know if you know about this, it's quite controversial at the time, or lots of companies were doing it until I think Trump stepped in. But I think it was happened when Obama, but Trump said, but basically, corporation tax in America, there was corporation tax, was quite high compared to other countries, especially compared to Ireland. So what companies are doing when listed on the NASDAQ, they'd headquarter in Ireland rather than America. And this would bring down corporation tax. And then I think Trump put a stop to it. But David is involved in this, all this, Chilcott. So in 2016, the US Treasury blocked activists from executing what would have been the largest corporate tax inversion in history, a $160 billion merger with Pfizer. Allergan, by the way, are part of 52 billion market cap, by the S&P 100 component and an S&P 500 component. So they're a major company. And like David was involved in all this. He's senior vice president at Water Chilcott, which is overtaken. So he's been involved at the upper echelons of all these big sort of biotech companies. And yet now he's with Open Orphan, which is what, sub 20 million market cap. It's got revenue. I had Kyle on the podcast this week. I like the story, I like the guy. And again, let me just go down to the one more thing. So Brendan Buckley, chairman, said, we are delighted that David has joined the board of his extensive experience in the orphan drug market, and we are looking forward to having David work closely with management going forward as we seek to rapidly grow the company. Yes. So again, the theme of this pretty much video is skin in the game. Cahill, CEO was on the podcast, 16% again of the stock. So these are three funds he brought in. You've got to think about this. This is a company, 2 million market cap. Right? 2 million market cap. He raised double the value of the company in cash at double the share price. That doesn't happen very often. And he brought in three funds. Funds generally don't look at anything below 100 million market cap. This company was like sub 5 million. How did he do that? So Brendan there just showed he got 3%, and Kyle Friel owns 16%. Again, the board own 20% of the company. So those three companies there, Immotion, Bidstack, and Open Orphan, directors own 20% of the company. And Kyle has said to me, listen, I couldn't put any more in. He did say about the wife being a bit worried, but he said this is a biggest sort of play. And he's really excited. It's almost like he's been evolving his strategy here. Like he said on the podcast, I've done oil and gas, which is high risk but potentially high reward. I've done biotech, drugs and drug development, phase 1, 2, and 3, which again, high risk but potentially high reward. And he realised, hang on, the pharmaceutical services industry with data platforms that can be scaled seamlessly are high reward but less risk. It's cost plus. That means it can be profitable very soon, but the scalability is there as well. So he's sort of honed in his strategy, and that's why he's gone big. That's why I like it. And I haven't even talked about the opportunity. Again, look below, show more. I've done some videos on Open Orphan, but the opportunity that opens them right now is very big. And when you sign people like David Kelly, who's had a huge amount of experience in this area before, they can open some doors, Okay. That's it. Let's look at some charts, and we'll come back and I'll show you my portfolio performance, etc. I want to start with the IUKD fund, which is a UK dividend fund. You can see below, talked about it many times before. This is an income-paying fund. It's always good to... There's different kinds of ways you can earn money from stocks and shares. Essentially, one is capital appreciation. That's share price going up. You buy and sell. So you buy low, sell high, and then you make money. Secondly, but that takes a bit of skill. It's harder than you think, of course, because the highs and lows are relative to historic highs and lows. So, what is actual high, what is actual low? And also, individual companies as well. Are they fundamentally getting worse or better? So a low may be there for a reason. Maybe the start of a lower low, maybe going lower, maybe going higher. You never know. But with income equity, you're always guaranteed some income, okay? It always, you have to sort of try and still buy at a decent price, but it's not essential. This, like I said, is it's the iShares UK Dividend Fund. Right now, it's a big drop off in the last week. Look at this sell off, and the RSI it's come down but cool off. It doesn't come this low very often, and this is quite an historic low. If I go back to literally, look at this. This is back in, I think, dipped down here in, 2016. We'll go back even further. And we are pretty much at 2013. So it's 6-year lows, It's a reflection of the stock market. This is the biggest dividend payers amongst FTSE 350 companies. So there's 50 companies this fund is invested in, okay? They range from exposure of 3.5%, but 50 companies is around about, average 2% exposure each company. And so this is selling off. I bought some more recently of this, and I will buy. It's the kind of thing I accumulate every sort of quarter or whenever the share price is below the net asset value. But I mean, you can automate with Barclays and stockbrokers. I automate buys here, so you can do it every quarter. In fact, my other fund, I do that. This, I buy it when it hits. I set up a price alert on my chart here, and I buy some, and it's filled in order. But this is what 734. Let me just look at what the iShares. Let me just look at the. Let's go to iShares account. Yeah, this is BlackRock, equity income. Scroll down, IUK, and 732 the net asset value. So if you can keep going below that, if you can keep buying below that, that's very good. It was a bit higher than that recently, so it just changed the net asset value, of course. But it doesn't go below this. Whenever you almost oversold here, it punches back up. It's worth almost buying, but it'll be interesting to see if this support holds. But it seems like it's breaking down. But keep an eye on this for long term. Top up on this once a quarter, and you will receive a nice dividend. They're paying around about. Let me have a look. I think it's about currently there are 6.95% dividend yield. That's what it is at the moment. All right. Okay, let's look at shares. Let's look at ANIC. This is Agronomics. Anything happening there? Let's have a look. Really on support here. Really on that support level here. Again, RSI cooling down. I think it's a meta theme. I think it's very big. So it's just below the 20-day moving average. It's just touching that. That's 50-day moving average there. Look, it's just touching that. It'd be interesting to see if it stays above that. Okay, Bidstack. Let's have a look at that. Trading in a range. I don't think it broke that lower range. It went up this week. Went up to like 36. Come back down. So it's broken that. Oh, that's the resistance. So that resistance it broke, but it came back down. So it'd be interesting to see if it holds this level here. This 28 level, 27 level, what is it? 27, 28 level. Because again, it's cooling off again, just below the green on the RSI, just below 50, or just above 50, I should say. So I genuinely think, though, I think don't put it past James to come up with some more news. I know people were expecting a trade deal or something, but don't put it past James to come up with some more news. Of course, I don't know anything, but I think he's been working very hard. And like I said, Q3 is news time, lock and load. Immotion, again, it's come off a bit this week because done a fundraise. But this is where the directors are buying. Look at this, more people buying here. I think this will hold this level. I generally do. I don't think the placing price is normally good support, especially if it's well supported. And so we'll see this. I think it will stay here and it'll improve from here. Like I said, directors are buying here. They see it as a decent opportunity. So do I, to be honest. Integumen, it's a bit weaker plate. Skin, not skim. Okay, yeah, look at that. It's down. It's cooling off. It's down below 40 now on the RSI. And it's done this consistently of late. There again, so it may have to come down here, I think. It's broken that level. Let's have a look here. Let's scroll across. It may be heading down. I don't know if it'll get there. It could come to 160, 1.6, maybe 1.4. That's the next sort of major support, really. So it may even come to that. Who knows? It may hold here. I don't know. It's on. We'll have to wait and see. You can never tell with charts, but it's always good to look. Charts not the be all and end all. I mean, fundamentals always break technicals, The news it trumps, basically, charts. But it's always good to see with the support. And just look at this. I like this because you can see the momentum and the weakness or the strength in the share price. Nice, you can see it moving before it does move, like that. Once it ticked up here, below 50, it started to move. Okay. Okay, what do you got here? Move my head. Oh, Nuformix, really been oversold here. I've started scaling in again here because it's right on this line. Look at this, and it's right in the support line here. Of where is that? So it's touched it there. Look at this. This is why it's a support line. So it tried to break up there, didn't get there. Then it punched through that. Then it came back and touched it again. So that's support there, and it's done it once before here and sort of here. But now it's just gone below it. We are really down in the oversold levels. And I think we can't be that far from news. There hasn't been any news for a long time. Look at this here. Look at the MACD. It's trying to converge. We need a good up day. I think it'll consolidate along this area. I really do. Around about 8 pence, above and below 8 pence. I think it'll consolidate here. And hopefully with news it'll rise. That's what I'm hoping. It's a guess, so that's why I'm scaling in. I'm not going crazy here. I'm just topping up slightly. But I think news is not far away. Open Orphan, there's not much data on the chart here, but let's get a quick look. Yeah, it bounced off here. Just that, so that level there, like I said, a nice bounce here. So maybe it'll consolidate between 6.5, and 6.75 here. And hopefully it'll form a base there and rise on decent news. News hasn't started here, but I do I'm quite keen on this company. I really am. You've probably seen that before. Polarean, good rise this week. Polarean really going crazy there. A huge potential. Like I said, one of the lowest risk phase 3 trials around. You can check out more information below. So 26 pence support maybe. It'll come back to that. We use that as support. But really in a new trading range. It's quite high at the moment, the RSI, like that. Again, look at that. Converged, push. Crossing the zero. I mean, you can look at the chart there, but you can look at a previous video on the MACD and RSI below. But I like that. It'll come back a little bit, of course, but I think it has huge potential. It could be the new standard in lung MRI scanning, globally. And like I said, even based off 100 of the top tier sort of hospitals in the US, excellent sort of potential, and that's just 100. There's 35,000 MRI scanners in the world. Powerhouse, not a bother. Safestay, some weakness in Safestay. I don't know why this company. It's frustrating. Sooner or later, this company will move. Again, I think it's consolidating around here. I don't think we'll have any big sort of downs from here. It may come down to 3-4, but this company is undervalued. It's genuine undervalued. Excellent management, skin in the game. They're going to become profitable this year. No need to go back to the market. They've got cash. And like I said, they are expanding their hostels. Very trendy, hostels worth checking out. Check out their Instagram account if you're on Instagram. Very, really in that zone. They know where they are. Very targeted, the demographic. But they want to be up to 40 hostels. They've got a clear route to 20. This time next year, it'll be 20. They're at 14 hostels already, I think, or 15 and 14. But there's a seller in here. And like I said, the fund is selling. And it's quite a liquid stock, so it's downward pressure on the share price. Away education. Away. Jackie Danielle came on the podcast this week, on another podcast, on a video on Vox with Anita. I quite like Jackie. She's skin in the game. I like this company. I think it's misunderstood. They don't do enough PR. That's the thing. They need to get more news out there, more chat out there, because very positive things are happening. They need to communicate that with the market a bit more, I think, and it'll work wonders. Well, I think it's a very good company. Like I said, they are cash generative, and they've got cash. And last one is Xeros. I genuinely think, even though it's run by a managed CEO, I genuinely think just the whole theme around water saving tech, it's going to be huge, and they've got a patented water saving tech which is being adopted by big companies. So it's just a matter of time. They may need to raise some funds, of course, because they've had a lot of money going to R&D. This year they're commercialising, but hopefully it'll get better. Okay, so I saw a tweet. Someone tweeted me, copied me in the tweet, said, Justin talks about some of the stocks he owns or maybe doesn't own. I thought, what? And it took me by surprise. I didn't even consider that somebody out there would consider that I don't own the shares I talk about. Like I said, the only reason why I talk about the shares is because I own them. So I'm going to show you my Barclays stockbroking account, okay? Now, it's a bit different to the spreadsheet, but I've shown you before, because I've scaled in, I've scaled down in these companies. So here we are. There's my holdings, right? Actual stock performance on Barclays, Nuformix at the top there. I didn't, like I said, they didn't go big in that at the start, so it went up. So I've scaled in recently. So even though I was a couple of 100% up now, I've scaled in, which has brought that percentage down. So Bidstack was as well. Like I said, I think my last big scaling at that was about 18 pence. When the placing was done in April, I was in Centre Parks. That was the last time I really bought big into. So of course, even though I started buying at 6 pence. And I was up when I got 18 pence. I started doing a fundraise, and it came down again. It dropped at 12 pence. I think I was buying at 12 pence. I started buying there. That's when I started buying again. Polarean 44%, Xeros
18%, Invest Way Education 15%, Vanguard Life Strategy, I've got one of the funds I own, 10%, Agronomics up 8%, Integumen 8%, Immotion 4%, Open Orphan 1/5, iShares, which is my dividend play, Safestay down 12.8%, and Powerhouse Energy down 13.2%. I've given Powerhouse Energy, of course, a deadline. If they don't reveal a commercial contract by the end of this quarter, I'm out. It's gone through several iterations of management, and here we are now on the second or third, I think. But here we go. Here's my portfolio performance. This is actual portfolio performance score. So 3 months, 87% up. Last 6 months, 99% up. Last 12 months, 127% up. And last 18 months, 170% up. And here is performance of the companies since I've covered them in the video. So if you, for example, if I just bought these companies when I first covered them and didn't scale in or scale out or anything like that, this is the returns I would have had. So it's Bidstack, 388%. Big Dish I sold. I was going to talk about Big Dish. I'm not going to. It's been hammered enough by apparently bulletin board people. I just think when you ever see a company, right, that releases news about their financial results, and they don't put anything in the main body of the RNS, but use that to talk about something else completely different. A magician would call that misdirection. But I'd always advise anyone to check out the financial results of a company. Okay. That's all I'm going to say. I don't want to say anything else. Nuformix, 130%. Polarean at 43%. Like I said, I'm less than that in my actual account because I've scaled in. Integumen, 21%. Way Education, 20%. Pretty much. Agronomics, 19%. Way Education, 17%. Open Orphan, 8%. I'm down in Powerhouse Energy, Safestay, Immotion, and Zeros, but not in my actual portfolio because I've scaled in when they dip back. All right, does that make sense? That's it. Thanks for watching. Don't forget, listen, if you want the next video to your inbox, straight to your inbox, then hit the subscribe button below and hit that notification bell by all means. And don't forget, if there's anything you'd like to see in these videos, by all means suggest it below, make a comment below, and I'll try and do it, whatever happens, whatever you think is worth it, whatever you think would create quality or value in some way, by all means, let me know. That's it. Oh, look, where is it, boy? I always forget where it is. It's there. My face there. Click that. And some more videos there for you to watch. Thanks very much. And my next video will be out on Wednesday.